Hey, everybody, and welcome to another episode of Bestie Bites. And today I'm here with my favorite bookkeeper in all of Lexington. This is Jenny Shnurr. She is Accounts by the Book, and she has so graciously offered to come in and talk with me about all the nerdy bookkeeping stuff that we can possibly think of.
Well, hopefully I don't bore everyone too much, but I think it's pretty cool that you think I'm your favorite bookkeeper that's what you do too.
I know, but I don't like myself very much. It's a whole thing.
Ouch.
You know?
Okay, so now we're going to go into therapy in the middle of this too, I guess. Whatever, it's cool.
So I had the idea a while back to invite Jenny on, and it was kind of a sweet thing. Whenever I invited her, she was like, "Oh, it's so cool that like you don't, see me as competition, and that you want to have me on the podcast." And I think that this is like what we're trying to do. Honestly, is create small business besties. And I love Jenny as a human. She's like the funniest, kindest person. But also, she's really good at what she does. And that is like so evident by all of the reviews and testimonials that I see online constantly. And everyone that I talk to, they're like, "Oh, do you know Jenny? She's amazing." So
it just makes my heart feel huge. Like,
yeah,
thank you so much.
Absolutely.
And I feel the same way about you. Like, I always see really positive reviews. I see people, and it's so great to see the way that you support women business owners. And one thing that it's been really cool to learn over my first year in business is how much opportunity there is out there and like defeating that scarcity mindset. And so it's really cool to see two bookkeepers who can be like, technically we're competition, but if we're helping people, there's plenty of room to help people. So
absolutely. And I mean, I draw on Jenny's wisdom a lot. So, I think it's always good to have, collaboration instead of competition. So with all that behind us, all the like woo-woo feeling stuff. All right, Jenny, so tell me about your practice.
Well, my company is Accounts by the Book, and I started last September, so just over a year ago. And I have, like 13, 14, 15 small businesses that I work with and do day-to-day accounting, everything up from just coding transactions and making a P&L all the way up to full charge bookkeeping, fractional CFO services, cash flow analysis, stuff that probably seems boring to a lot of people, but the cool part about it is not the numbers on the paper, but what that can mean for a business owner.
100%. Yes, I love it. All right, so off the top, first of all, I think we should start with what's the difference between accounting for tax purposes and accounting for business data information?
That's a really good question. I'm really glad that we're going to talk about this because it's something I'm really recognizing when I pick up a new client. Is a lot of times they've been working with a bookkeeper who maybe they create some reports every 6 months or just at tax time. And if you just want to file your taxes with the IRS, that's perfect because you're going to save a ton of money by working with someone who's not in your books every day and somebody who is, just making sure that everything is organized to be able to file that Schedule C or that tax return. But I think as businesses grow, they need to have more hands-on bookkeeping, I guess. Someone who's checking on their books every month, if not more often. Some of my clients, I do reporting every week for them. And make sure that they're seeing things in a way that they can make business decisions on it. So, for example, if you're doing bookkeeping for taxes, revenue is revenue, and it doesn't necessarily matter where it comes from. So as long as it's money in the bank from a client, it counts as revenue because that's all the IRS really cares about. But as a business owner that when you're trying to figure out how to grow your business, you kind of need to know, is this revenue from a monthly retainer, or is it from bookkeeping services, monthly bookkeeping services versus cleanup services? Is it CFO work? Because what parts of my business can I grow? What parts of my business are profitable?
Right.
What parts of my business are not profitable? Which parts are draining me? Like if you don't have that information at your fingertips, it's really hard to make decisions about how to take your business to the next level.
Absolutely. Yeah, I couldn't agree more. And I think one of my favorite books is the 80-20 rule, and that applies in most business decisions. You can apply that rule to decide if 80% of my benefit is coming from 20% of my product, I really need to put all of my effort and energy into that. And if you don't have that data, you can't use those philosophies or principles. So, but yeah, you're absolutely right. There are definitely applications where you know, for whatever reason, your business, you're not trying to grow it. You're just happy like maintaining the status quo, those types of things. Like that's a perfect opportunity to save some money for your business and not really have somebody digging in the books constantly. So,
Yeah,
yeah.
absolutely. Or for really simple businesses, like you have one income stream and 3 or 4 regular expenses. They're always the same every month.
Yeah.
Well, you might not need somebody who's in there all the time, digging in, making it work. Like, I
Right.
mean, and that's perfect because, like we said earlier, there's different bookkeepers. There's so many businesses out there. It's not competition, but I might not be the right bookkeeper for everybody for that reason.
Exactly. Well, that was a beautiful explanation, and I'm glad to have that out of the way because I think now, as we move forward through the conversation, you can kind of check, like, where do I fall in this? Am I looking for a bookkeeper that is, doing more tax bookkeeping? I just need to talk to them once or twice a year, or am I looking for somebody who's really going to help me get in there and understand what's happening? So I think the next thing that we want to talk about is one of my favorite misconceptions or misunderstandings. I talk to a lot of small business owners who don't understand the difference between categorizing or classifying transactions and reconciling their books. So talk to me about how we can help people to understand the difference and the necessity of each of those.
Yeah, that's a really, really good point because that is one of the biggest things that I see is that people will send me their file because I always review their file. I want to see what's going on to understand if their QuickBooks, if they have it, or, Wave or whoever they're using for their software, like, is it up to date? Is it current? And so a lot of times people will be like, oh, yeah, my accounts are good all through last month. And then I go to the reconciliation screen on QuickBooks and the accounts have never been reconciled. So categorizing transactions is basically putting them into buckets about where they belong on your income statement or your balance sheet. So if you buy some Canva software because you're going to be doing marketing for your business, that might go under an advertising or a software bucket, and that just depending, it's kind of a personal feeling about where you want to see that.
Right.
And so every month or however often we're doing bookkeeping, because it might not be every month, we're going to categorize transactions and it's just recording. This is what happened. And it puts it in the transaction register. It came out of the bank. And the reason that we bought it was because it needed to be for this software expense. But reconciling is to make sure that you have an accurate record in your books of everything that happened and exactly what happened. Because
Say that part again. I'm sorry.
exactly what happened.
Okay.
Yeah, because I don't know if you've ever seen this. I bet you have. Duplicate transactions.
All the time.
All the time. And it happens like maybe you have an invoicing software that connects with your accounting software, QuickBooks. I'm just going to say QuickBooks. I'm just going to use QuickBooks because most of us use that. So I have a client who uses Jobber, for example,
Yep.
and the transactions go directly from Jobber into QuickBooks. Then you get that bank deposit. And a lot of times people will record that bank deposit as sales because it is to you, right? I get it because, hey, that money went into the bank because it was sales. But because Jobber has created an invoice, that sales is in there twice.
Right.
And so now we might have a profit and loss statement. I always say income statement, but I'll say profit and loss statement. Either one, they're interchangeable. The profit and loss statement might say that we did $200,000 in revenue, but really we did $100,000 because we duplicated everything. So when you reconcile, you check off all of those transactions from the list to make sure that what the bank statement or the credit card statement said, that every single transaction is in there one time, the beginning balance, the ending balance line up, and then you know that your books are accurate for that month.
Absolutely. Yeah, I think that that's one of the most common ways that you mentioned is having an outside software that's creating invoices or payments for you. But another way that it happens and that I've seen is overzealous business owners who want to be on top of things and they're trying to do their best. And so they make a $3,000 credit card payment. And then they go, oh, I made a credit card payment. I'm going to go tell QuickBooks that I made a credit card payment. And they create a credit card payment in QuickBooks. And then when the transaction actually hits the bank, it's now duplicated. So, yeah.
And, I just want to say, I think there's nothing wrong with creating that credit card payment, but we've got to learn add versus match. So QuickBooks loves to add things, but if you've added that transaction, that's cool. You can add it, and then when it comes to the bank feed, you can click match, and then it knows that that's that one you've already added.
Absolutely.
So that's like, I love my business owners who give me some of that information, because it, maybe there's $500 transactions in a month. I might not really know which one's going to where.
Right.
So it can be helpful.
It's absolutely helpful as long as there's communication and we know what's happening. And
Yeah.
I think I don't mean to disparage in any way business owners who are active in their bookkeeping, because I say a lot of times bookkeeping is not rocket science, but if you don't know anything about it, it can feel like rocket science. So long as you're educating yourself and you have an understanding of what's going on, then I encourage people to be, in their books and looking at it and helping when they can.
Yeah, I think there's certain transactions that it's easier for business owners to just naturally, intuitively wrap their head around.
Right.
And then some things are little bit more complicated, and it's a really good thing about QuickBooks is that it's so user friendly, but most business owners I know didn't, other than like me, they didn't get into the business to be an accountant, right?
Right.
Like you and I were like, okay, we can do, well, I don't know, you like the bookkeeping?
No, I don't.
I like try to give you all the credit, but like I got into it because I love it. Like I just find some joy in seeing everything balance out. The debit, the credit, they're equal, they're good.
You know what I love about bookkeeping?
Okay.
Is after someone else has done it, I love looking at the income statement or the profit and loss statement and saying, ooh, what does this tell me about the business, and how can I help the business make different choices, or maybe make the same choices, So that's what I love about.
Get a pat on the back, like, hey, I made a good decision even without the data.
Exactly. Exactly. Yeah.
No, I agree with you. It's really cool once the bookkeeping's done to just be able to say, now what can I learn from this?
Yeah.
Yeah.
Okay. So I'm going to ask, what are some red flags that business owners could maybe take a look at in their own bookkeeping software, whether they're doing their own bookkeeping right now or someone else is doing it, just to kind of check in and get a pulse and say, are there any red flags that maybe things aren't happening properly?
Yeah, I thought about a few of those.
Okay.
I was going to write them down, but I'm just going to pull them off the top of my head. So I think the best place to start is probably the balance sheet, because the balance sheet is going to have something that you can actually compare to, right? Because you can compare the bank balance on your balance sheet versus the bank balance in the bank or your bank statement, and is that right or not? Like anyone can do that. So you don't have to be an accountant to know that. So
with the caveat that sometimes there are some discrepancies if you have outstanding transactions.
Right, absolutely. Like things have to make sense though.
Right.
I looked at one recently that had like a balance of negative 100,000 in a checking account.
That doesn't make sense.
And like, I worked in banking for a long time before I became an accountant.
Mm-hmm.
I don't know many banks that are going to let you go $100,000 to the negative.
No. I had someone ask me questions recently, and his credit card balance was showing negative 3,000 in QuickBooks, but he had an actual balance that he was carrying of like 8,000. So it was like an $11,000 difference. And he's like, I don't know what happened. And you would see that on the balance sheet immediately. You would go, ooh, there's something wrong. Why is your credit card negative $3,000?
Exactly. I think anything negative on the balance sheet should be something that should make you say, hold up. What's really going on here?
Yeah.
It's definitely possible. Like some of us have been there where we've overdrawn our bank account. Like, so if your bank account's $100 overdrawn,
it's going to show that.
It's going to show that. Well, if we're keeping up with our books, maybe you don't want to. Maybe you're ignoring your books if you're $100 overdrawn, because maybe you need to go run up some more revenue or something.
Right.
But yeah, it would show that. So negative accounts on a balance sheet for me would be a huge red flag that we need to dig in and see what else is going on. Another one that I see is super common is really high balances in either accounts receivable or undeposited funds. Should I give like the background on what those are for people who don't know? Okay.
Absolutely.
So accounts receivable is money that you've invoiced for that you haven't brought in yet. You had, you're waiting for that revenue to come in. And undeposited funds, we use that when we've received the money, but we haven't taken it to the bank yet. You went to the mailbox, you grabbed a whole stack of checks, you put them in there. and then you take the bank deposit in.
And I'm not going to say that that's completely like an archaic thing that nobody uses anymore, but it's becoming more and more rare for businesses to actually have an undeposited funds because so much of what we do now is virtual payments, electronic payments, etc. So unless you are actually receiving paper checks and holding them in a safe or a Dropbox or something like that until you go to the bank, then really that undeposited funds shouldn't get used.
It shouldn't get used that much, but I think a lot of those third-party softwares, your invoicing softwares, they're set up for the old school way to do it. And if you receive checks, they should go that way because you might, like, maybe we snap the picture right away on the phone. I do. But maybe if they're bigger checks, they're too big for your deposit limit. Hopefully you're getting big checks. Yeah. So we're going to take those into the bank.
$75,000 at a pop.
Yeah. Well, and every business is different.
Right.
And you know that. So
Yeah.
some of our clients and some of our besties have those. So does that undeposited funds balance or that AR balance make sense for your business? Like if you look at that and you see that there's $800,000 in undeposited funds and you don't have $800,000 in checks, red flag.
Red flag.
We need to take a look at that.
Yeah.
And then another one that I see is like payables that have really high balances, sales tax payable, payroll tax payable, direct deposit payable. Sometimes that's because, again, the accounting software set it up to do it a certain way. Maybe the payroll software is connected to QuickBooks.
Right.
It sets up a payable for payroll tax withholding due. And then that doesn't get paid until next month. And then we see the payment to the IRS and we say, well, that's a tax. I'll code it to taxes, expense. But in that case, it was actually sitting in that liability account waiting to be held. So we need to make sure to reduce that. So those are some of the big ones that I see. Do you have any others I missed?
No, I think you covered them all. Those are really the ones that are just giant red flags of like, there's something not happening appropriately. And on the AR side, I'll just add that, you know, if you do have a ton of money hanging out in AR and it is like legitimate, then it might be time to find somebody to help you recover that money because your business would be much better off with a little cash flow. So.
Yeah. I mean, I run into that with a lot of my clients because we're so busy. We're doing all of the things. We're doing the job. We're invoicing. We're doing the bank. We're doing the admin. We're doing the social marketing. Like, how many of our besties are solopreneurs and we're just out there doing everything? Wouldn't life be a whole lot easier if the money was in the bank and we weren't worried so much about collecting?
Yeah. Who, not how. Who can help me with this problem, not how can I fix the problem.
Yeah, absolutely. And that's one of the things that I've gotten a lot of joy of helping some of my clients with when, you know, they've been dealing face to face with the owner of the company or the people who've been doing the work. And so sometimes when they get the call from the accountant who says, we noticed that you have an overdue balance and it's over 60 days past due now. We need to set up a plan to get these payments in.
Yeah.
And it's really, really fun when I'm able to help my clients to collect on something that they've been sitting on and worrying about.
Absolutely. Yeah. Okay. We are now to my favorite part of the discussion. This is about to get real lively. So I'm going to put down my champagne so I don't spill on myself because I know I'm about to start jumping out of my seat. Jenny, I want to talk about shady deductions. I wish we had like an Eminem song to play right now. Shady's back.
Dun, 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 dun,
Back
dun,
again.
dun, 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 dun. Oh, I can put it on.
All right, we got it. All right, so let's talk shady deductions. And we're not talking Eminem. We are talking things that people may or may not know are not congruent with IRS guidelines. And I like to tell people when they do a consultation for Cultivate Accounting, I tell them right off the bat, like, there's a couple things you need to know about us. We're not going to be the cheapest option because we like to do the high-level bookkeeping. And we also are going to challenge our clients to be ethical. And for us, ethical is be good to each other and be good to the rules that are established.
Yeah.
So I'm not always the most popular bookkeeper.
Yeah, I mean, it's hard, and I think it's really hard because there definitely are bookkeepers out there that will give advice that I think is really poor. Like, hey, if you go out to dinner and you're having dinner with your spouse and you all talk business for part of dinner, then it's a write-off. Have you heard that one?
I've heard it.
You've heard that one. Like, that's not what the IRS says. And it's, a lot of people do it.
A lot of people do
A
it.
lot of people do it. And so it's really hard and it's hard for me to put my foot down. Like, at the end of the day, I am not the one who has to stand up in front of the IRS if I deduct something if they deduct something they shouldn't. Like,
Absolutely.
So if you tell me that it's a business expense, I'm going to tend to believe you, and I'm going to recommend that we only do business expenses. But dinner with your spouse is not usually ever going to be a business expense.
I'm going to ask about one that I heard recently and sparked something in me that was so severe that I had to do a reel to explain my distaste for this sentiment. But recently, there was someone on social media who posted that if you purchase clothing that is the same color as your logo schematic color scheme, then it can be considered a uniform and you can write it off.
Yeah, I didn't see that post. I'm on social media too much, but I missed that one. No, that would not probably be something that you should write off. Like the IRS would say, I think, and I try to be really careful. I'm not an EA. I'm not a CPA. Maybe we need to talk about that too. But like, I know some things about tax law, and there's not going to be situations where just because it's the same color. Like a uniform should have your company logo. It should be only used. I mean, would you wear it to the store on your way home from work? Sure, but like it's used for work. It's not
you
like
wouldn't be getting dressed for a concert and say, "Gee, I can't wait to put on my Accounts by the Book polo to go see."
I mean, I have
JT.
some pretty good colors, so
Yeah, well, that was my reaction when I heard that. I was like, "Well, man, I've lucked out because my logo has like every color of the rainbow in it."
So
like
you can just anything.
So anything I buy
is a uniform.
Is a uniform. Which
Yeah.
okay, that was not true. Do not take that one sound bite.
That is not the advice. Put it in context. I mean, there's a lot of fake news out there, but that's not it.
Michelle and Jenny said I can wear anything as a uniform.
That is fact checked. Pants on fire.
Okay, so uniforms, that's a very common one. And you pointed out logos have to be on the clothes. It has to be worn specifically for the job.
Right. Or if it was like protective gear, like
exactly
steel-toed boots that you're wearing on the job. Mm-hmm. If it's a hard hat, I suppose we would know that was a definitely business expense. Yeah. If you're wearing your hard hat out other places, Village people out there, like I want to see it. Come on, let's go out
like,
later.
Invite us.
Invite us. We're going out.
Yeah, I think also like, scrubs, if you're a medical professional, that can be a uniform even if it isn't logoed.
Yeah, absolutely. Because it serves a specific purpose for the job.
Although I've seen some scrubs that are quite fashionable.
Well, but then like cool.
Yeah.
Like why not wear the cute ones?
Okay, so what are some other common ones that you see?
Have you seen, I know you like massages. Have you seen massages as a business expense?
All the time.
Okay. Now, if your body is part of your job and you have to like be constantly moving, there might be situations. But like my massage therapist actually tried to convince me that my massages could be a business expense, and I couldn't justify writing it out.
Yeah, and I think this is a good place to basically say, like, at the end of the day, as a business owner, like, you are the final say in what you put as a deduction or not. Like, I can't gatekeep you from putting something in there. Jenny can't. We can give you guidance and say this may not be in accordance with IRS guidelines. Here's what the guideline says. You make that determination for yourself. Because at the end of the day, if you were ever to be faced with an IRS audit and they were digging through and they were like, hey, why did you spend $5,000 on self-care in 2024? And you say, oh, well, I'm a hairstylist and my back hurts because I'm on my feet all day and I'm in a stagnant position, so my shoulders and my neck hurt, so I have to get massages. Like, it's really up to that IRS agent of how he's going to interpret the regulation to determine whether or not he or she, I'm sorry, I just think like, I think of a IRS agent as like a mean old man that's like going to come like smack me with a ruler or something, you know?
Well, you know.
But it's up to that individual IRS auditor to make a determination if your plea of what the purpose of that transaction was is legitimate or not. And so if you like to live life on the edge, by all means, live life on the edge.
I'm not going to stop you. Like I said, I'm going to take my client's word about whether something's a bookkeeping or a business expense.
Right.
But I think what you have to realize is if you do get audited, if that auditor, that mean old man with the glasses and the ruler that he's smacking your wrist, if he decides it's not a business expense, then you're going to have to pay the back taxes on that, but then you're also going to have to pay interest and penalties. Mm-hmm. So I think life is about balance.
Right.
So where's the balance and where do you feel good about that? And what dollar amount do you want to be on the hook for?
Yeah.
If in 7 years that comes up with 7 years of interest and penalties.
Yeah.
And I don't know, for me it hasn't been worth it. Like I'd rather do it the right way. And sometimes that might mean paying a little bit more in taxes.
Right.
And nobody likes paying taxes. I get it.
No.
No.
I hate paying taxes. But you know what I don't hate?
What don't you hate?
I don't hate the national parks.
I don't hate schools.
I don't hate schools. I don't hate water
I don't hate water.
coming out of my faucet.
I don't hate that.
You know?
I really like running water.
A lot of the infrastructure, a lot of the things that we kind of take for granted,
Yeah.
And so I'm not saying that I hope all of you have ginormous tax bills and you can't alleviate any of that. But what I am saying is that tax is necessary, but also for me, I'm a highly anxious human. Right? Like, that's just my life. I'm a highly anxious human. So if I can say, you know what? I'm going to do my books by the book, like by the IRS book, and follow the rules to the best of my ability and alleviate that anxiety and that stress and that burden of like, what if? To me, like, what's a couple, I mean.
Couple $100 a year extra in taxes.
It's not that big of a deal.
But what about this? What are some business deductions that maybe clients are missing? Do you have any of those on mind? Because maybe we just ruined your day by telling you can't write off dinner with your husband, but maybe there's things that some of our clients are missing that we could help them with.
I think some of the common ones that I've been able to identify for people is, number one, and I'll shout it from the rooftops forever, but track your mileage.
Oh my, wait, are you a Mile IQ fan?
I like Mile IQ. I'm gonna break your heart right now.
Oh, no.
Like, I use the QBO tracker.
Okay.
Because it's already built in. It's already on my phone.
Yeah.
And I haven't had any trouble with it. I know there are some people who, swear that it's the worst thing ever. And that's cool, but I haven't had any trouble yet.
I just like to call Mile IQ Tinder for mileage because you get to swipe right.
You do
for
that
business.
with QBO
is it the
too.
same thing?
Yeah.
Okay, I guess I just haven't used that one.
I tell people that all the time.
Okay.
I'm like, it's like a dating app. You just go through and you swipe your miles.
Okay, so definitely get a mileage tracker because that's a huge one. 67 cents per mile for business miles.
Yes.
Yes.
And you corrected me the other day. Thank you, because I still had 65.5 and I was like, oh my God, it did change. And I'm like stuck in the archaic days.
In the archaic age of the first half of 2024.
Right, exactly.
Yeah, so definitely mileage. I would say home office too. If you're working out of your home, have a dedicated space. You all can't see much of our space right now, but we have a space. And so we can look at the total square footage of the home, look at how much of that is that dedicated workspace. And so maybe it's 10% of our home. Then we can write off some of the utilities, maybe mortgage interest. I mean, it's really going to depend on your specific situation. So you might be able to speak more, but like talk to your tax preparer. But have a dedicated space in your house and get that home office deduction.
Absolutely. The home office deduction is huge. And I think the standard home office deduction is $1,500. Or you can itemize your home office deduction if 10%, or whatever your square footage ratio is of the office versus the entire home. If you do the math and it's more than $1,500, then for sure you can use that number. But if it's less than, you can just claim the standard home office deduction, which, depending on how big your office is or how big your home is and all of that, like that can really add up for you.
Yeah, absolutely. I mean, that's $1,500 is probably what, at least a 30 your electric bill every month. I don't know,
Yeah,
something.
I
Yeah.
mean,
I don't know. I'm just throwing out numbers. I'm just
I mean,
making it up.
it's money,
It's just money, right?
These are the things where you get the tax savings that you're looking for instead of trying to like slide a massage in as a deduction. Like, let's just take advantage of the deductions that are actually there for us.
That are actually real. And then to sleep better at night.
Right, exactly.
That's the way that I see it anyway.
For sure. Another one that gets missed sometimes is your tax prep, you know?
Yeah.
But here's the caveat. If you have a business return, that is deductible. If you have only a personal return with a Schedule C, only the amount they charge you for the Schedule C is deductible. So, but just make sure that like when you pay your tax preparer at the end of the year that you are deducting those expenses as well.
Yeah, absolutely. Those professional fees.
Yes.
Oh, wait, I just remembered another one we've talked about. The coaching and what was it, therapy as a business deduction?
Yes.
Now, I'm 100% on board with therapy. Anybody who knows me
Right.
knows that I'm like shouting from the rooftops, like, go talk to somebody. We all need a little bit of help and
Right.
support out there. But that was one I've seen online, you saw online, that
Yeah.
we could just write off all of our therapy. And
Yeah, we could write off our therapy. And I think the IRS guideline would be something a little more along the lines of if you are receiving coaching for business specific purposes, yes, deductible. But if it's life coaching because you don't know what direction you want to go in your life, or if it's therapy, those
if you
things.
just go and complain about your husband or something, you can't write that off.
Never do that. What?
No? Okay. I guess, never mind.
It's fine. It's fine. They're not going to listen to this, right?
Oh, Mike is definitely going to listen to this.
Sorry,
My
Mike.
husband is like a podcast junkie, and one of the most commonly used phrases in our household is, so I was listening to a podcast today.
Yes.
And I'm like, wait, were you listening to a podcast? So he probably hasn't listened to Small Business Bestie yet. But when I told him that I was doing this, I'm like, are you going to listen? He's like, you just have to let me know when the episode. He wanted to tell me it's not going to drop right away. It's gonna take a little bit. I'm like, okay.
He's in the know.
He's in the know.
He knows
He's in
how
the
these.
know.
Well, yours is actually going to drop pretty quick
Okay.
because I needed a Bestie Bites episode. So this Tuesday.
Woo, that's quick.
Super
Turn around.
quick.
Okay.
Okay. What any other like commonly missed deductions that you can think of?
I think those are the ones that come off to the top of my head.
Yeah.
That I'm thinking about.
What about, can you talk to me about if I'm a business owner and I go to fill up my car, I've been running errands for the business all day and I want to fill up my car with gas. Do I get out my personal card or my business card?
I've heard so much different advice about this one. So I'm going to say what I do and what I think, and then I'm going to ask you also like how you do it. So personally, I take the mileage deduction. So I put all of the way I have been doing it is I've been putting everything on my personal card, and then I calculate that how much of that use is for my vehicle. And so I'm looking at the mileage, and so if I drove 500, and I'm not going to do the math in my head, I can't do 67 cents per mile off of that in my head. But no,
30,
but I'm just writing off the mileage deduction. You either do mileage or actual expenses. So now if the vehicle is in the business's name, then we're looking at it from a whole different direction, and you're going to want to use the actual expenses for the most part. But for those of us who are using the same vehicle for business and personal, I generally recommend that we put all of those expenses on the personal card and then get that mileage deduction and pay ourselves back for the business mileage. What do you do?
Well, I think that is that's the easiest way to do it, right?
Yeah,
Because otherwise you get really in the weeds trying to keep track of how much fuel was purchased over the year, and you still have to track your mileage to do actual expense.
Yeah.
So that's where I think a lot of people think, well, I'm just going to, if I use the car for business today, I'll use the business card. Mm-hmm. And if I use the vehicle for personal use, I'll use the personal card. But that's not actually how it has to happen. You track all of the expenses all year long. You track all of the mileage all year long. And then you still have to say this amount was personal and this amount was business. So for me, it's just easier. The rate that they give us, that 67 cents, if you think about it, like unless you just drive a car that's getting like 8 miles to the gallon, you know?
Yeah, absolutely.
Then I think you're coming out ahead with the mileage.
Yeah, and it's totally different. I work with a lot of businesses that have fleet vehicles and
Right.
different things like that. So those businesses, that might be, I mean, for some of my business owners, that's cost of goods sold, because if you're a moving company, that fuel,
Right.
you have to, you can't do the job without it. Cost of goods sold. Let's get that right on the top line. But for, for those of us who are in professional services, that to me just so much easier to do it with the mileage.
Wow. A wealth of knowledge and a lot of laughs too. So is there anything else that you feel like you would want to tell the besties about who you are, what you do, what you love, anything like that?
I want to help businesses to grow. And so the people that I really love to work with are people that are just maybe frustrated with the financial side of their business. They don't want to spend their time digging into that and want to spend more time focusing on the actual work of the business. And so I just get a lot of joy in being able to say, just leave it alone. Leave it to me. Tell me what you need me to take care of. Call me when you have questions with dollar signs in front of them. So that's what I like to say. If it has a dollar sign in front of it, I need to hear about it. And then that way I can help give you guidance and make sure that we're doing it in the best way. Sometimes the easiest way, sometimes the cleanest way, but also the way to maximize your savings, to do it the right way, to track it in the right way.
Amazing.
By the book.
By the book. Oh my gosh. All right. So we will make sure to link out to all of your socials and things like that, but just shout them out for us really quick so that everybody can hear them.
Oh boy, my socials are a mess. Okay, so my website is accountbythebook.com, but my
S.
No, I know.
Okay.
I know. I needed a coach when I started. The domain wasn't available. I loved the business name, so here we are. So yes, the business is Accounts by the Book. The webpage is Account by the Book. And then on Facebook, it's Accounts by the Book. And then I think on Instagram, it's Accounts by the Books with 2 S's. It's a mess. I'm going to figure it out one day. Does anyone have any help, besties?
I think there's some besties that can help you. Yeah.
I need some help.
Yeah. Y'all listening, hit her up, give her some advice and help her get that straightened out to make it easier. But in the meantime, I will make sure that we link to all of the messed up domains.
We're
and
all
socials.
doing our best.
We are doing our best. And your best is killing it because you're just everywhere and everybody loves you and you're doing a great job.
Thanks, Michelle.
I'm
You
proud to
are
know
too.
you.
I always am glad to see your name everywhere.
Aw.
So we got besties we can trust who are out in the world doing bookkeeping, helping keep your finances in order.
That's right.
Yeah.
All right. Well, until the next time, we will talk to you guys later.
Bye.